Welcome to Simple Investing Secrets. In today's video, we'll review the 12 best dividend-paying REITs to buy now. So before we start, please like this video and subscribe to our channel for weekly updates. Let's get started. If you do it right, finding the best REITs to buy can produce excellent returns. Purchasing top-notch REITs is one way to accomplish this. These investment vehicles are essentially like your own personal mutual fund with a real estate investment niche. If real estate values go up, your return will be greater than what a straight investment would give you. These investment vehicles are especially attractive for those looking for additional passive income. With so many options available, choosing the best is hard, but this video will help. It talks about some of the best REITs you can buy right now and explains why you should think about buying each one. Now is the time to take advantage of low prices and purchase REITs. REITs that have done well in the past have seen their stock prices drop because of recent market volatility. In some cases, to unprecedented lows. But this gives someone who is good with money the chance to invest in big companies at cheap prices. Getting in on a purchase is important, especially before other investors see the potential and drive up the price, diminishing or eliminating any discounts or savings for strategic buyers. Purchasing REITs right now means investing in a market with expected returns over the long term without having to pay past market prices. In short, it could be worthwhile. From REITs' high dividend yields to their potential for growth, there's an option here for any sort of investor. Let's review our list of the 12 best dividend-paying REITs to buy now. Number 12. Mid-America Apartment Communities Incorporated, ticker, MAA. Mid-America Apartment Communities Incorporated is a Germantown, Tennessee-based residential REIT that specializes in purchasing and leasing apartment complexes. It owns over 101,000 units in 296 communities in 16 states and Washington, D.C. Most of Mid-America Apartment Communities properties are located in the Southeast, Southwest and Mid-Atlantic states. The company's stock 52-week range is $141.13 to $231.63, and the most recent closing share price was $155.31. On December 13, 2022, Mid-America Apartment Communities raised its quarterly dividend by 12%, from $1.25 to $1.40 per share. The ex-dividend date is January 12, and the dividend was paid on January 31. The present yield is 3.6%. Mid-America Apartment Communities has raised its dividend 5 times since 2017, for a total increase of 35.4%. That's the gift that keeps on giving. Number 11. Realty Income Corporation, ticker, O. Realty Income Corporation is a San Diego-based REIT that owns and operates retail properties under long-term net lease contracts. Realty Income's tenants are large well-known companies like Walgreens, 7-Eleven, CVS Pharmacy, Lowe's, Dollar General, FedEx and Walmart. In total, Realty Income owns and operates over 11,700 properties across the US, the UK and Spain. The Monthly Dividend Company, as it calls itself, is a member of the S&P 500 Dividend Aristocrats Index that has declared 630 consecutive monthly stock dividends over 53 years and has increased its dividend 118 times since its initial public offering in 1994. That's a track record very few REITs can match. On December 13, 2022, Realty Income announced an increase to its monthly dividend from $0.248 to $0.2485. The ex-dividend date is December 30 and the dividend was be paid on January 1. The stock's 52-week range is $55.50 to $75.40. While this latest hike may not seem like much, it should be noted that Realty Income has raised its dividend in small increments like this 14 times over the last 5 years, increasing the total dividend by 20.4%. The present dividend yield is 4.5%. Number 10. Digital Realty Trust, ticker, DLR. Digital Realty Trust is a noteworthy technology-focused REIT. Instead of apartments and other buildings for rent, DLR provides space for high-tech server data centers. Businesses that want the ease of cloud computing but still need reliable server space to store their data are very interested in the company's services. Now is an opportune time for income investors to take advantage of DLR stock. Investors are none too happy with the rise of interest rates this year. The industry of real estate investment trusts relies on banks to give them money, which has been hard since rates have gone up and hurt all businesses. Also, as interest rates go up, investors who want to make money will find government bonds more appealing than REITs. Recent stock market volatility has also made investors wary of REITs. DLR has been relatively quiet recently, with the only major news being the recent public offering of $350 million in additional 5.55% bonds due in 2028. This comes after DLR's previous issuance of $550 million with the same terms and conditions. With the extra money, the company can be more flexible with its finances and take advantage of more growth opportunities. Whether it be through acquisition or development projects or even investments in high-yielding accounts, Digital Realty is well prepared for a rising interest rate environment, an impressive feat underscoring its sound fiscal standing. The sell-off in tech stocks has caused a drop in their value. It gives people a good chance to buy things at lower prices and get income benefits. With its sturdy customer base and promise of rapid growth, DLR is worth looking into for those looking to invest in the best REITs to buy with a unique approach. Number 9. Rayonier, ticker, RYN. High inflation and record-breaking prices are two things that define the modern economy. These things make it harder to buy the things you need during these times, and stocks, bonds, and real estate investments become even more appealing as a way to protect against the value of money going down. Rayonier offers an interesting combo investment opportunity, combining the security of property ownership with the profit potential of a traditional commodity producer. There's no other company quite like it. So if you're looking for a way to keep your hard-earned money safe from inflation, enhance your portfolio with real assets, and have growth potential, then definitely invest in Rayonier. Rayonier is a big player in the timber business. It owns and leases a lot of forest land on 3 continents. As of September 2022, their impressive portfolio included 2.7 million acres divided into 2 U.S. regions, the South and Pacific Northwest plus 417,000 acres in New Zealand. These forests provide various vital resources for dozens of industries worldwide. Not only does this yield incredible economic and environmental benefits, but it also demonstrates Rayonier's powerful dedication to responsible forestry management practices. Rayonier's third quarter results proved to be a mixed bag. Adjusted EPS came in higher than expected. But revenue fell significantly below expectations. Despite these challenges, the company is looking to deliver full-year guidance of over $175 million and pare down its debt to less than $25 million. This is good news, especially since the pandemic has hurt almost every business in the world. Rayonier remains well positioned to deliver favorable results as we move into 2023, making Rayonier one of the best REITs to buy for investors. Number 8. Sabra Healthcare REIT, ticker, SBRA. Sabra is a leading healthcare REIT investing in skilled nursing, senior housing and behavioral health facilities across the United States and Canada. This year, Sabra Healthcare REIT has been a bright spot in the markets, particularly when it comes to REITs. It is delivering strong performance even amidst market volatility and recessionary fears. This vast network houses more than 43,100 beds, and provides Sabra with a steady stream of income that is highly immune to traditional economic swings. Investing can be tricky, as markets often experience highs and lows. Sabra Healthcare REIT is a good choice for investors who want to lower their risk while still making small profits. This REIT focuses on the healthcare industry, which provides steady cash flow no matter how the markets are doing. In addition, this company benefits from America's aging population. The aging population in the U.S. is set to rise from 52 million in 2018 to 95 million by 2060. Therefore, Sabra looks like a safe bet moving forward, thanks to its defensive characteristics and the growing need for healthcare products and services in the United States. However, the stock is down this year. Sabra Healthcare REIT missed earnings estimates in the third quarter. Investors are in an unforgiving mood right now. And with its peers beating analyst estimates, the REIT found itself in a tricky situation. But both skilled housing and housing for seniors will get better in the long run. Regarding the dividend, Sabra Healthcare stands a class apart from other best REITs to buy. At 9.52%, the yield is incredibly juicy, and few companies can match it. Number 7. American Tower Corporation, ticker, AMT. American Tower Corporation is an American real estate investment trust or REIT that owns and operator of wireless and broadcast communications infrastructure in several countries worldwide. Infrastructure REITs, such as those that serve the telecommunications industry, tend to be less cyclical than retail or office REITs. These REITs tend to have the defensive qualities of the telecom sector, such as a lower beta, which is a measure of volatility compared to the market. A good pick here is AMT, which has a beta of just 0.54, indicating it gyrates about half as much in either direction as the broader S&P 500 does. Currently, AMT boasts over 220,000 sites across the world and has a strong presence in the 5G space. In November 2021, AMT bought CoreSite Realty. This helped the company add more data centers to its portfolio. Currently, the company pays a dividend yield of 2.8%. Number 6. Crown Castle Incorporated, ticker CCI. With a market cap of about $61 billion, CCI is smaller than AMT, but it is by no means a minor company. As one of AMT's competitors, CCI currently owns, operates, and leases more than 40,000 cell towers and 80,000 miles of fiber optic cable across the U.S. The company just released its third quarter results for 2022. Among the highlights were a 7.9% increase in revenue year over year, a 12% increase in funds from operations, FFO, and a 48% increase in its FFO margin. The funds from operations or FFO is an important measure of a REIT's overall operating performance because it shows how much net cash it makes. CCI also pays a strong dividend yield of 4.5%. Number 5. Ventas Incorporated, ticker VTR. Healthcare companies tend to benefit from inelastic demand. Even during a recession, spending on healthcare stays pretty steady, which helps earnings in the sector stay steady. For a healthcare REIT play, investors can buy VTR, which owns and operates a portfolio of more than 1,200 healthcare facilities in the US, Canada, and the UK. This portfolio has a wide range of property types, such as medical office buildings, nursing homes, rehabilitation centers, laboratories, and research centers. COVID-19 hit its nursing home segment, but Ventas has since recovered. Third quarter earnings for 2022 saw FFO of 76 cents per share and net operating income growth of 13% in its senior housing operating portfolio. The company's dividend yield currently stands at 4%. Number 4. Welltower Incorporated, ticker WELL. An alternative to VTR as well, which also holds a portfolio of healthcare-related properties. Well owns senior housing, long-term care facilities, and outpatient centers in the United States, Canada, and the United Kingdom. Like many of the other stocks, Well just reported quarterly earnings, which increased its FFO per share from 80 cents a year ago to 84 cents. The company said this was because its senior housing portfolio was full, which helped bring in more money. In November of 2022, Well also signed a joint venture or JV agreement with Inaja Health, with the intention of transitioning 147 of its senior care skilled nursing assets from Welltower to the JV. Welltower currently pays a dividend yield of 3.7%. Number 3. Physicians Realty Trust, ticker DOC. Investors who don't mind mid-cap stocks can consider DOC, which has a market capitalization of $3.6 billion. This healthcare REIT develops, manages, and leases properties primarily to physicians and hospitals, notably medical office buildings. For its third quarter 2022 earnings, DOC reported a 14.1% year-over-year increase in revenue and net income per share of 28 cents, up from 10 cents in the same period the year prior. The last big thing the company bought was 14 Class A medical office buildings from Landmark Healthcare Facilities in December 2002. DOC currently has a 6.2% dividend yield. Number 2. Healthcare Realty Trust Incorporated, ticker HR. HR is another mid-cap healthcare REIT with a current market capitalization of $7.5 billion. In 1993, HR only owned 21 healthcare facilities. Today, it owns over 728 properties, most of which are medical offices and outpatient properties with multiple tenants. In its most recent earnings report for the third quarter of 2022, the company said it had an FFO of 39 cents per share, bought 9 medical office buildings for $95 million, and leased 393,000 square feet of new and expanded space. HR also merged with Healthcare Trust of America Incorporated in June 2022, which gave it a much bigger share of the market. HR pays a dividend yield of 6.3%. Number 1. Prologis Incorporated, ticker PLD. PLD is one of the largest REITs traded on U.S. exchanges, with a market capitalization of $108 billion. This industrial REIT is a big player in the global supply chain and logistics industry. PLD owns or runs over 984 million square feet of logistics facility space, which it mostly rents out to companies that ship from business to business, sell things in stores, or fulfill online orders. Some of Prologis' biggest tenants and customers include Amazon.com and FedEx. Few industrial REITs can compete with PLD's economy of scale and portfolio size. Over the trailing 10 years, PLD has returned an annualized 16.6%, beating the S&P 500's return of 13.2%. Currently, the company pays a dividend yield of 2.7%. This concludes our list of the 12 best dividend-paying REITs to buy now. Before putting your hard-earned money into buying stocks or investing in the market, you should always do your research. Remember to like this video and subscribe to our channel for weekly updates on the best stocks to buy and cutting-edge investment strategies for building wealth. Thanks for watching, and best of luck with your investments.